Explain it like I'm 5.
Let's do it. What's the topic today?
Okay, I'm going to break it down real simple for you. What is a target date index fund?
You know,
Period.
you
Question
say
mark.
simple, but these are hard questions and
It's
people
true.
don't know this stuff, right? So I like to think of all of the investments you can buy, like a big pie. And in that pie is Apple, Nvidia, bonds. It's like all the stocks and bonds are in this pie. And when you first get into investing, it seems like what you're supposed to do is go and take the good slices out. I will just buy Nvidia. I'll buy Home Depot. I'll buy Best Buy. I will buy all these big box stores with Fox salesmen because they must be doing well. But the more you learn about investing, the more you learn that picking and choosing stocks is very, very difficult. It's very hard to beat the market. It can be expensive, time consuming, costly, etc. So the best way to invest is to buy these huge slices, which are basically called index funds. And so, for example, if you're picturing the pie of all possible investments, like half of those could be just a total US stock market index fund. And then a quarter, like a little quarter pie, could be international stocks. And the last quarter could be bonds. And that could be your investment pie. And you can buy those big slices individually. So you can go to a brokerage website and type in VTI, which is the Vanguard Total Stock Market ETF, and that could be half your pie. Is this making you hungry yet, by the way?
Yeah, starving.
Are you a pie guy?
Pie guy?
I
I'm
was
more of
trying
a
to make it rhyme.
yeah, no, I'm more of like a cake girl,
A
I'll
cake
say.
gal? Okay.
Chocolate
Yeah.
moment, but pie.
Yeah.
I won't say no to a good pie.
Yeah. I'm the same. When I was a kid, I was like, why would anyone eat pie when cake exists? And I still largely agree with that sentiment. Um,
Exactly. Or you could have a muffin, which is just like cake for breakfast.
this is my big question. When does a muffin become a cupcake? Is it the
It
frosting?
absolutely, it's the frosting. It's not a cupcake, but it's definitely cake.
Oh,
It's
well, it's a cup too.
but it has
They're
no
the same
frosting. You're right. No,
cuppiness.
no, you're right. The frosting is what makes it a cupcake.
Okay, well, but then
Go to Webster's, they'll tell you.
Okay, so what was the question? What's the difference between a muffin and a cupcake? No, it's a targeted index fund. We're talking about
Yeah.
pie,
Right.
and so you can buy your big slices individually, U.S. stock market, international stock market bonds, and that's pretty darn simple. That's called a 3-fund portfolio. But there's an even easier way, which is called a target date index fund. We just buy one thing, and this sounds crazy to people with all the complexity of investing, stocks and bonds and options and futures and day trading, all this stuff. You can literally just ignore everything I just said and just go buy one thing called a target date index fund, which is the whole pie. And then the amount of each slice, each of those big slices, US, international, and bonds, is based on your age. When you're younger, you have very few bonds, between 0 and 10%, depending on which like target date index fund you buy. Because if you're 20 and the stock market drops by 50%, that's actually great news for you, because now you can buy way more shares at way less money because you're in the buying phase, because you're in the wealth building phase. But when you're 70, if you're living off of your portfolio and you don't want that to drop at all because you just want the cash to be providing income, dropping by 50% would be very bad. So you want mostly bonds. And so that's what a target date index fund does for you. It gives you the entire pie with all the slices, and they're the right amount based on your age. And they automatically shift over time. And target date index funds get hate for 2 main reasons. By the way, I love them. I think they're great, and I think the hate is wrong. So I'm going to address the pie haters out there, the cake girls like you who want your cake and eat
Cake
it too.
girls, stand up.
That's right. But the pie haters, they say problem number 1 is the fees. They say to buy this in a convenient package all once is much more expensive, and that's almost like completely false. There are expensive target date funds, but there's also expensive mutual funds. And I don't buy any of those expensive funds. But Vanguard offers target date index funds for 0.08% fees per year, which is so close to 0. getting it any smaller is essentially rounding error. I'd say anything under 0.2% is very, very low. And this is less than half that at 0.08%. So don't buy the high fee target date index funds. Look at the expense ratio and buy the cheap ones. 5-year-olds, stick with me.
Call
Stick
them
with
out.
me, kids. Yeah.
And they love cake and pie. So they're just
I know.
they're really confused.
We're going to throw in cake and pie every once in a while. And then you can get back. Okay. So that's reason number one, target date funds get hate because of the fees. But I actually agree with that. Don't buy the high fee funds.
Right.
And reason number two is they seem too simple. People love to inject complexity into their investment strategy. They say, why would I buy all the stocks when I could invest in ARK, or I could do a triple leverage QQQ, or I could short sell for just while COVID's happening, then I could triple leverage for the run up and all that stuff. I would say, good luck, but you're gambling. And that stuff's way more likely to hurt you than help you. And the decades of experience that I've been investing, all the reading I've done, everything I've learned, talked to the best minds in this world, it comes down to simplicity actually makes you more money. And so you'll actually make more money in a target date fund. I guess another, like a subcategory of simplicity is some people would say, well, I don't want bonds or I don't want international. Why not just do all S&P 500? Because it grows faster. And my answer is, well, it has grown faster the last 10 years, but will it grow faster the next 10 years? And the answer is, nobody knows.
Right.
Nobody knows. And in fact, usually if you are buying the thing that did really well the last 10 years, you don't own the thing that's going to do well the next 10 years.
You're chasing past performance.
Oh my gosh, Jen. See, you know what it's called. It's called chasing past performance. Get out of here. So yeah. And so if you say, hey, a target date fund's too dumb, it's too simple, you're probably wading into the area of speculation, gambling, chasing past performance, which I think will make you less money over time. In my own experience, when I had my windfall. I sold my company back in 2015. I put like $2 million in the market in one day. And I didn't do a target date fund. I chose like 7 different ETFs. I chose commodities. I read all the books. I thought I had this kind of clever strategy. I chose commodities, gold, foreign real estate, U.S. real estate, and then of course U.S. stocks, international stocks, bonds, and was kind of balancing them. And they're all ETFs. They're all low. They're all trade free. They're I was trying to be this super advanced guy. And then fast forward 10 years, and I looked at how it went. And basically, if I just bought a single target date fund and done nothing else, I would be about $600,000 ahead of where I currently am.
Oh,
and I'm not doing
dang.
bad, But it's just people are so unwilling to do that really careful auditing in history. And they just say, oh, well, if I had bought Bitcoin in 2010, yeah, but that's survivorship bias. You're just saying, okay, yeah, it's easy to say that now, but you didn't, did you, right? So now, not knowing what the future holds, what are you going to do? And I say, keep it simple.
Wow.
Are you more of a pie guy now?
No, definitely not. Cake all day. Cake baby. I don't know. I lost the analogy, so I don't even know what that means to be a cake girl in this instance. However, what I will say, to bring it back to another food reference, all of this, this is what I've learned after 9, 10 episodes, is investing is like going to Taco Bell. No matter what you get, you're getting the same thing. Everybody's trying to make it fancy, and you're getting meat, cheese, and some kind of flour tortilla or something like that, right? Whether you want to do targeted next month, you just you're following just a few rules for everything. Everything is the same ingredients.
Yeah,
you know what 100%. I mean? And I feel like everybody's asked, or I guess it's everybody's questions are the same thing. What stock should I pick? What do you think about Nvidia? What's the target index fund? It's all kind of asking the same question. Or you're asking all these questions to get to the same answer. So let's just go to Taco Bell and get ourselves a chalupa and then be millionaires.
Yeah. And what's a chalupa? Tortilla, meat, cheese, lettuce. Well, what's a gordita? Tortilla, meat, cheese, lettuce. Well, what's a taquito?
Burrito.
Tortilla.
Right.
What's a burrito?
It's all the same thing.
It's all U.S. stocks, all international stocks, it's all bonds. And the less you can get into trying to pick different menu items and beat the system, just buy the combo meal and go for a walk.
Let's all become Taco Bell millionaires. We need something that's Maxinista for Taco Bell, Taco Bell millionaires. I'll think on it maybe.
What's
for next
Maxinista?
Time. TJ Maxx? What? Oh my God, you are rich. You don't go to TJ Maxx?
I'm a Ross Dress for Less guy, okay?
Oh, yeah, okay, same thing. Ross, TJ Maxx, same thing. Okay.
I never heard Max.
But TJ Maxx shoppers are called Maxinistas.
Oh, I didn't know that.
Come on, Jer.
No, that's my
Okay.
bad. No, trust me. Like I'm new money, so I've been broke for
Okay.
most of my adult life.
Okay.
So
Got you. All right. That's fair. All right. Amazing. I feel like I know even a little bit more about target date index funds. Thank you.